Good morning, everyone. My name is Diana Marrero, and I'm the SVP for Strategic Development here at Foreign Policy Magazine. Thank you for being here today. I'm so excited to welcome you to this program, Unlocking Private Capital for Climate Action Amid Geopolitical Uncertainty. And as you can tell, we are going to be addressing some very weighty issues in today's conversation, ranging from how global leaders are ensuring that the most vulnerable populations are protected, to how private capital can be deployed to developing countries to create what it takes to have successful public-private partnerships to fight climate change. I'm grateful to the Climate Investment Funds, or CIF, for their partnership on today's program. In fact, if you'd like to hear more on the topics we're covering here today, I'd invite you to check out Heat of the Moment, a podcast in partnership between Foreign Policy and CIF. It is available wherever you get your podcasts, and that's Heat of the Moment. And today's program will serve as a preview to FP's second annual Virtual Climate Summit, taking place April 27th and 28th, featuring leaders like John Kerry, Queen Rania, several heads of state, members of Congress, and so on. You can find more information and register at foreignpolicy.com/events. Before we dive into the first panel, a few housekeeping notes. Please make sure that your cell phones are off or silenced. If you're planning on using your phone, we welcome you to tweet using our hashtag FP Climate Summit 2022. We're asking that all members of the audience remain masked throughout the program. And with that, I'm honored to introduce our first panel. Her Excellency, Minister Rania Al-Mashat. She's the Minister of International Cooperation of Egypt, which, as many of you know, will be the host of COP27 this year. And she is joined today by Mafalda Duarte, who's the Chief Executive Officer of CIF. I'll turn it over to my colleague, Maggie Lake, who will be moderating today's program. Maggie, take it away.
Thank you, Diana. Hi, everyone. Thanks so much for being here. It is wonderful to see everyone in person. I think none of us are going to take that for granted anymore. And really excited about this conversation. I couldn't think of it being more timely, given what we see playing out around the world and on headlines. So let's dive right in. And fantastic to see both of you. I feel like, and we were discussing this just a moment ago, there was so much enthusiasm, and I feel like a real sense of optimism and progress coming out of COP26. And then the world just started to, with so many challenges, geopolitical challenges, war, a pandemic that won't end, supply chains that are still strained. How are you both thinking about the conversation? And Minister, let's start with you. How are you thinking about the conversation around climate, given the backdrop of geopolitical challenges that we're seeing?
You're absolutely right. Up until February, the climate conversation was the leading conversation. Whether we were in cabinet discussing it with our colleagues from the private sector, investment banks, etc. Of course, what's happening now, I don't want to say derails the conversation, but reorients it. And because food security is coming at the top of the challenge globally, this again pushed the focus on adaptation, the focus on water, the focus on agriculture, the idea that the only way to move forward to protect ourselves from similar crises, be it from drought, be it from war, is to actually mobilize more investment into these very critical sectors. So it's absolutely true that there is a sense of more topics on a very crowded agenda. But nonetheless, finishing World Bank IMF meetings, the G24 communique, for instance, had a whole section on climate, had a whole section on blended, de-risking, the need for more concessional financing from MDBs on the climate agenda. So we're happy that we pushed that still in, and we're trying to leverage on as much goodwill and money that exists among partners.
Mafalda, really same question to you, and I think the issue of risk is paramount, because when we see these sorts of events, people become, certainly investors, become very risk averse.
Correct. As we went to COP26, my view is that we were already in a sensitive geopolitical context, because we were on the back of a pandemic that was going on for a number of years, and we saw the impact that it had globally, but we were seeing very much the impact in middle and low-income countries. They are already being disproportionately impacted by climate change, and they were suffering quite disproportionately from the pandemic as well. Debt levels rising, difficulty funding development priorities. What has happened since, and I think in that context of that geopolitical, or already challenging geopolitical context, I think COP26 achieved quite a lot. I came out of COP26 quite positive. We had a lot of engagement from private sector, announcements around private capital, announcements around deforestation, halting methane emissions, which is actually quite important in the short term. Fossil fuel, and a lot of discussion around coal transition. So I think it was, collectively, even though, of course we need to do more, I think it was positive. Now what has happened since has aggravated. We are really now with compounding crisis. The climate, the pandemic, and now the war in Ukraine. So what was already a difficult context, I think now for middle and low-income countries is even more challenging. Because as the minister said, now we are confronted with inflation, with impacting food prices, energy prices, debt levels really rising significantly. And this is really a very significant impact for middle and low-income countries. But at the same time, I hope that, as this week we are in the World Bank, IMF meetings, and as we move towards COP, people understand there's an understanding that we can't really halt climate action and climate investments. We have to tackle these short-term emergencies and crises and have, and really embed what we do of a lot of solidarity towards middle and low-income countries. But we can't really halt climate action because that is the biggest crisis that we will be facing. And we can't really wait until we solve the pandemic or the war in Ukraine and then start to think again about climate. But of course, what we have seen in all of this macroeconomic context is flows of capital moving away from middle and low-income countries where they are actually needed the most. And so this is why we are having this conversation here as well today is what can we do a lot more than what we have done in the past to bring the public capital, the philanthropic capital, the private capital to move flows, a significant higher level of flows, private sector investment flows into developing countries, into middle and low-income countries. The investment needs are very large, as we know. IEA says we need to get into our clean energy path and energy transition, we need $4 trillion of investment every year. This is really significant levels of investment that we haven't necessarily seen in the past. So this is why this conversation is so important.
It is, and as we watch this, I think that there is you can see a sense of urgency start to come up, though, because we have seen what happens if there is no action. The vulnerability on supply of energy, for example, has really been underscored. And even if you're not directly affected, it's a wake-up call to many saying this can't go on. So in a way, it has increased urgency. But Minister, you just laid out there are many competing priorities. How is Egypt thinking about this going into COP27 when you have now energy, food security, poverty, water scarcity? I mean, how do you prioritize, or what is Egypt's priority going into COP?
Well, thank you for mentioning all these priorities because they are all at the end developmental questions. And therefore, when we're talking about climate, we should not divorce it or see it as a track separate from development. If we tie both of them together, we will find that the financing is going to be more this concept that it's climate finance only, and it's not going to be able to echo impacts on the other SDGs, for example. I think that is maybe a very important realization from the geopolitical challenges that we're facing today. Because food security, water, vulnerability, people being vulnerable, all of that at the end is very much within the same conversation. So COVID, of course, was a shock that also threatened to derail the SDG agenda, and we tried, within our country's vision, our country's priorities, always pushing for the SDGs. ODA plays a very important role for Egypt. Our portfolio is $26 billion. It's split up into the different SDGs. We did that mapping. Number 13, which is climate change, gets a big portion of that, split into adaptation and mitigation projects. So in every project that we implement, in every partnership that we have, we try to link it with the SDGs. And climate is part of the development process as well. So I think this is also a takeaway from the crisis that we are facing today. And the other point on energy, because you mentioned energy, we are seeing opportunities despite this backdrop. For Egypt, for example, being able to export more gas, the connectivity with Europe, our efforts in trying to push green hydrogen, and hopefully by COP27 we will have projects that we can show to the world on that very important type of progress. But as Mafalda discussed, and both of us were in London at the brink of the Ukraine invasion, and at that point, all the efforts were just thinking about how we can solve this humanitarian problem, and for us it's like look at what will happen to emerging markets: fuel, food, fertilizer, and financing. The 4 Fs that really are basically affecting us going forward. And what we want out of COP27 is to show how commitments can move into implementation in a practical way. There are very significant and important examples of private sector capital that has been able to move into countries with concessional financing as well, and has had impact. CIF is an example of that. And we just want to see how we can scale it. So the Egyptian COP is one about from commitment to implementation. It's one about resilience and adaptation. And again, the food crisis that we are living in today puts this to the forefront as well. The final point is the climate/development agenda is a multi-stakeholder agenda. It's the government that has to do its regulatory reforms, create access to markets, and have a climate/development vision. And that's why the World Bank has these new products called CCDRs, the Country Climate Development Reports. So climate and development come together. You have the private sector that wants to bring their capital, all these pledges that happened in Glasgow, but we also need to ask them what are their asks from the international community, what are their asks from the governments to be able to mobilize this capital on ground. Philanthropists, we want to know from them also, are they happy with the governance structure of MDBs to be able to also, create that de-risking? And then, the public or civil society, because many of the projects in communities are also being implemented by civil society. So there's a role for each and every stakeholder to play, and that is also a message that we want. It was very clear in Glasgow, and we want to follow through in Sharm el-Sheikh next November on these points.
And Mafalda, respond to that as well. And these are critical points that you're talking about. Getting it from commitment to implementation is everything. What's needed? What policies are needed? And are there best practices that we can look at to say, even if they're small, this is a road to do this. This is what we see is possible.
So we at the Climate Investment Funds we have been. I'm positive because of what I've seen being possible with our concessional capital and risk capital in middle and low income countries. In fact, we were set up on the back of the financial crisis, 2008 financial crisis. And in most of these markets and countries, there wasn't yet any investment in renewable energy. So there was barely any, so these markets didn't exist. There were no markets for example, access to finance for resilience. And we have seen the role that this capital and partnerships, what can be achieved. And I think now what we need to do is basically, I like to think of it like we have been preparing for a marathon over these years, and now we have to run the marathon, and we have to run it fast. And so we've come a long way. If we talk about energy transition, for example, or renewable energy deployment, we've come a long way in 10, 15 years. The cost curves, the track record, the fact that we have investments in renewable energy in a lot of countries where this wasn't happening, or they were very limited. But now we have around 2,800 gigawatt of renewable energy installed capacity globally. We have to go to 28,000. So this is why I'm saying, we were laying the foundation and we were preparing for the marathon. Now we have to run the marathon. But of course, because of, as we were discussing earlier on, because of the magnitude of the investments, it's very critical, the question of how do we best use the scarce public capital to really de-risk the private capital. And I think this is now the conversation that is happening for quite some time, but we need something tangible. This is why, I think Egypt is placing the emphasis right on action. How do we translate these commitments that were done at COP26 of so many, investors saying we want to contribute and, we want to become net zero, and the 130 trillion in G funds and all of those different commitments. How does one translate that, in fact, into concrete investments where they are very much needed? I think, I mentioned this often as well when I'm in different conversations. It is so important that one understands that without significant investments, really significant investments in middle and low-income countries, we will not win this crisis, the climate crisis. 2/3 of the investments, of the trillions of dollars of investments that need to happen in these economies, because they run on most of the energy supply, 70% of the energy supply. This is where most of the population is and where most of the GDP is. So unless if we get this right, we will not get to our climate goals. So we have experience of the role that scarce public capital can play. We ourselves have been supporting project developers. We have been supporting commercial institutions in countries to enable them to create markets where they don't exist and mobilize the domestic capital. We have helped in some markets where it's possible to aggregate investments, and against that aggregation and those assets, issue bonds in capital markets. But we need to take this to a much larger scale right now. That's the
main challenge in scaling, do you think? I know it's a big question, but...
So you mentioned, and the minister mentioned as well, of course, there has to be enhancements in the policy and the regulatory environment. I think countries have come some way, but there's more to be done to really create all of the critical conditions for private sector flows to come in. There's no doubt about that. But again, in my view, we need to have these conversations with the private investors and with the institutional capital and all of these asset owners and managers. How does one bring their capital into emerging markets and low-income countries? Yeah. Because everybody says the money is there. Yes, the money is there. There's trillions of dollars of capital out there, but they are not going where they need to go, or they are not going to the very large extent where they need to go. So that's, I think, and I know the minister Rania and the COP27 team. This is why I think it's so important, this emphasis on action. How do we actually get this moving? And again, the resilience part is also very important because we've already locked more than 1 degree. Mm-hmm. And this has consequences for the vulnerable countries. This has consequences for the low-income countries, for the middle-income countries, for the most vulnerable, for the SIDS. This has consequences. So what do we do about that? And we've already locked that, and the latest IPCC said that we've probably missed the 1.5. So that is an important agenda as well.
Time is of the essence. Lucky for us, we do have some private sector. We're going to get to them in a second, but I want to expand the conversation now, and if we could please welcome Indonesia's Minister of Finance, Sri Mulyani Duarte, and Canada's Minister of International Development, Harjit Sajjan, to our cozy couch. Thank you all. Thank you for being here. Minister Duarte, if we could start with you, and I think let's pick up on this issue of as Mulfada said, getting the infrastructure in place to secure the private sector funds which may be there, especially when we're talking about underserved communities, against the challenges that we now see. And I would add to that, some people talking about regionalization and move away from globalization, which will only further compound the challenges. Your thoughts on the priorities and how you're addressing investment in Indonesia toward climate?
Well, first, on the climate, we know that there is at least a building block before. There is a Paris Agreement in which each country has already announced their NDC. And then from this NDC, Indonesia is 29% with our own effort, 41% with the support from the international. Then our homework is translated those commitment into an action. Which sector will contribute most for this reduction of the CO2? And for Indonesia, two very important sector is forestry and land use, which is majority in terms of the contribution of the CO2. And the financing for reduction of the CO2 on that forestry is much cheaper if you compare to the second most important contributor for the CO2 is the energy sector. As you know, that Indonesia is rich in natural resource, including coal, which is now become the attention of many, and 62% of our energy is actually dominated by coal. So for us to be able to face down the CO2, we have to address on the energy sector, especially on the coal sector or coal power plant. This is the challenge for us when we have to design the policy framework. Currently, Indonesia has already put it in place, the policy on value of environmental economic or economic of carbon. We also introduce or now preparing the carbon market. Mm-hmm. We've already passed the legislation on a carbon tax. We will introduce the cap and trade. Of course, it still need to be designed in stages because after 2.5 years with this pandemic, the economy is not totally all right. It is still in a very, very early of recovery. So we have to make sure that this policy framework will not aggravate the burden, especially for the people. So the principle of just and affordability is very, very critical. And when you talk about affordability, it is translated into three. There is the people affordability, business affordability, and the budget affordability. Because you can end up with a big subsidy or incentive that is going to erode your own fiscal policy. So within that context, back to your question, how we are going to create an investment, a climate for climate change investment. This is one of clarity of the policy is very important, because if it is not, then you cannot actually provide signaling and guidance, especially for the private sector, where we are going, how we are going there, what is the timeline. I think that's very important. That's why when we announce, for example, this carbon market, cap and trade, and carbon tax, we discuss very intensively with the business community, especially the coal sector, because they are going to be the one which is affected. On the forestry, maybe relatively easy, because everybody agree that we have to preserve forests, we plant the mangrove, that is relatively cheap. But energy, is something which is a combination between securing the supply of energy, reliable one, because when the economic recover, the demand for energy definitely is going to be increased, right? And the current supply, which is dominated by the coal, if you are going to phase down or early retirement, then you have or you need investment to retire this coal, existing one, replace it another investment for renewable, and addressing the issue of the social economic impact, how the people who work in this coal area and so on. And that's why Indonesia now launching this energy transition mechanism. We started with ADB. We now working very detailed in the transaction part. What does it mean in retiring the coal? Now in Indonesia, we have PLN, that is the state-owned enterprise, monopoly on electricity. Private sector can sell through the IPP, independent power purchase, and usually the contract is take or pay. So if you are going to deal with this, you have to first, if the asset belong to the PLN, that is our SOE, you really don't have to renegotiate contract. We just imposing qualification or criteria. If this coal plant is old, polluted, non-efficient, this can be retired and we can replace with the renewable. That's win-win game for the PLN, because balance sheet is going to be much healthier, base price is going to be better, and of course from the climate change is also better. More complicated if this plant is belong to the private sector. They usually have the contract of 20 or 30 years. So if you say that if you are going to retire sooner, then you have to buy this stream of revenue. So we are discussing very detailed about what does it mean on this kind of incentive for this private sector owned power plant to be able to willing to retire sooner with the net present value, which is need to be fair. So that is one of most important criteria when you are talking about the market forces. The third, which is now we Indonesia receiving a lot of attention, is in addition of the existing power plant, we actually is already agreed with the pipeline. Why? Because in the past 10 years, we projected the demand for electricity is going to be double-digit growth. And during that time, we've already granting on our pipeline, power plant including coal. So this is already granted, but not yet commissioned. So the plant is not yet built, but they've already have the contract. So again, this is require another challenge of buying this contract. Now, with this kind of situation, usually I share this problem to many who concerned about, okay, Indonesia, can you contribute in terms of reduction of coal? I can, but let's discuss the calculation. This is going to be the cost for the PLN, SOE, for me, the budget, for the people. So if we can design a policy that is affordable for the people, business community, PLN, and my budget, then we can go. But if you ask Indonesia to transition of this energy that will bankrupt my budget, bankrupt the PLN, it will not fly.
Yeah.
So now it's really come up into a very detail how you are going to buy down. The challenging part of the today's situation is because the inflation is very high now in many parts of the world. So we are no longer living low interest rate and plenty liquidity. So this kind of investment will have a huge cost. Now with the borrowing cost increase, it's going to be even more challenging. So I just want to share you that this dynamic of the global economy will definitely, even with your good intention, goodwill, good determination, it will not easily translate it until the calculation is right.
Yes, of all the challenges we listed, we hadn't even mentioned rising interest rates, and that is another one. And I think that is such a wonderful example about the sort of nuances and level of detail that has to be paid attention when you're transitioning, especially, sometimes when you're on the investment side, it's presented as a binary choice, right? It's clean energy versus fossil fuel or legacy energy, and it of course, for the people on the ground, actually putting it into place is much, much more nuanced than that. And I think that the practitioners know that, but that has to filter in, and the infrastructure in terms of financing has to reflect that. that transition that has to happen. Minister Shajan, different situation, right? You're in Canada, and I read that you mentioned at a forum sort of touching on national security, climate change impacting military capability. Expand on that a little bit. It's not something that often comes up in conversation.
Yeah, so those of you who don't know, I used to be the Minister of National Defense for 6 years, and now I'm in international development. And those of you know, and Marc-André, who's sitting back there, please raise your hand. He will also know that I talked about conflict prevention as Minister of Defense and the focus on development and climate security. And the reason I say this is if you look at conflict around the world, there's always a root cause how it starts. And food insecurity crisis, we talk about, oh, there wasn't enough food, but why? It was because of climate. So climate security is real. So when you look at all the conflicts that are being created, and if we don't focus on climate, well, guess what? We're going to have more conflict. We're not going to have enough resources with all our militaries. We will run out. And militaries are designed to deal with also, certain conflict, high-intensity conflict, and now we have seen now the importance of what militaries actually are there for, of deterrence. And what's happening in the horrible war that Putin has started. So we need to focus on climate security. So this is an emphasis that I've had as Minister of Defense, and now in development, get to focus on the prevention piece. The work that we do here, and we talk about climate, is also relates directly to security and conflict prevention as well. So that's what I talk about. We will run out of resources with all our militaries combined if conflict's increasing because of climate change.
And it's interesting right now, given what's taking place in Ukraine, we see countries amping up their defense budgets. I mean, this is money that is going to be taken from somewhere else and go into. Does that create a problem in terms of linking climate with security and conflict, or does it present an opportunity? If the money is going to defense, can that making that link between conflict and climate more clear open up possibilities and get stakeholders engaged who may not have otherwise been?
Well, first of all, in the defense community, I used to say this, and the Secretary of Defense also said this as well, is that if you don't put money in development and climate work, you need to be ready to buy more bullets, right? Let's look at what Russia has created. Should be a responsible country, has created an unneeded war, right? So yes, there is an importance of deterrence, but we cannot forget about the importance of prevention and the conflict that's taking place also around the world. So that work that we do on prevention is absolutely needed because the unpredictable nature of our world right now and leadership like with President Putin. So we can't take our eyes off. We can't reduce our investments into climate adaptation because this is all what we're talking about is prevention. When families don't have a choice, and they can't feed their families, they will have to make difficult choices and will turn to other groups who will give them that opportunity. And so I've always felt that people call it a 3D approach, whole of government, the triple nexus. At the end of the day, you cannot separate the security piece from the development piece from the climate piece.
That's an excellent point. I wonder if, and I'll address this really to all of you, but Minister Rania, maybe you can speak to it. Addressing the most vulnerable populations, you've all brought that up, and we're in a situation where they're going to be under pressure because of what we're seeing on the global economy right now. How does that fit in? It's a critical part, we know, but what can be done in terms of making sure that they are part of the conversation, that they are part of the investment process, a stakeholder who has their voice? Is it the part of the government? How can we better make sure that is front and center?
When this war happened, the first action that our government took, and I'm sure other governments, is to try and stave off the impact on the most vulnerable in each country. So that happened by raising minimum wage, by trying to make sure that the subsidized bread is available in quantities and there's no change in that price. So this is the immediate impact on the vulnerable. If we're looking at on the medium term, when we're seeing communities being affected by either being left because of development issues or because of the climate challenges picking up on them. That's why targeted projects in communities is very, very important. And many of the projects on climate are not always the mega projects, but there are also ones that are tailored to farmers, ones that are tailored to better seeds, ones that are tailored to better types of irrigation. So when we talk about private investment and talking about budgets, it's a whole array of types of projects, and that's why this stratification is important. And there's a place for different types of capital and different types of instruments to be able to address the vulnerable, to be able to address the big infrastructure, to be able to address the energy transition. So the menu is quite open, and that's why when we say there's a space for every stakeholder, it depends on what your objective is in terms of providing that type of or different types of financing. In our case, and I just want to mention the energy transition to renewables. In 2014, the government announced its integrated sustainable energy strategy, percentages, KPIs to move to renewables, and it did happen. It happened through government policy to include the private sector. It created a lot of jobs in the areas where these solar plants were being set up. So again, it's leaving no one behind is a concept that we can use when we're talking also about leaving no one behind in the process of inclusion, whether you're an investor, whether you're a government, whether you're the private sector, philanthropy, or civil society.
And Minister Andrade, there's an opportunity, I think, now to have that happen sooner in the process, right? Before it would have been addressing it after the fact, but now, if done properly, the earlier you include in the conversation, the more effective. And I think this is the power of the SDGs as well. Many can be achieved in a project, and by listing them and being aware of that from the beginning, it can also sort of unlock partnerships that may not have existed before.
Mm-hmm. Well, I think this is part of the education as well as the massive communication that climate change is a threat, and especially for the poor, they are becoming even more vulnerable. And I really don't have for Indonesia, there are a lot of evidence that we can provide the sinking of the land, especially on a coastal area, then their property of many of those people which is not really well off, they are becoming even more depleted, or in this case eroded. And then we also talk about especially the millennial generation, that they are now getting more knowledgeable about this climate change, excited. We even have a survey regarding, okay, if we have to prevent the climate change and it will cost you, how much you willing to pay to prevent this climate change? And actually, it's quite interesting to see that the millennial willing to pay to prevent. It's not like changing their lifestyle, no longer using the plastic bottle and all those things. That is really something which the momentum is there. So conversation is very important. Program, especially during this COVID related situation, the pandemic, part of our social protection but also recovery is actually creating a mangrove replanting in a massive, that's a job creation, job intensive, labor intensive activity. So we can create job, provide cash transfer for work, in which the work related to this mangrove replanting on a coastal area, and that is the area which World Bank also supporting in this program. So actually you can really create quite a lot of activity, which is they are not talking about theoretical, about 1.5 preventing 2%, 2 degree and so on. For those people, they just need job and income. Yeah. So you need, the challenge for policymaker is translating those big idea into an activity base that for them, it's creating a better welfare for the people. That's also included, for example, for Indonesia, as I said earlier, forestry is the biggest contributor. So for the community surrounding the forest, that's going to be very, very important. So now we are, for example, redistribution land. We are asking that this need to be preserved. We provide the credit with the subsidized interest rate for them so that the economic activity is going to also moving. So a lot of what we call it the pandemic related handling and economic recovery program at the same time addressing the issue of climate change. That's what we are doing when we are forced by this pandemic to actually design the recovery program. So I think, yeah, it's quite a lot from translating big idea into a real program and activity.
Minister Shajan, great point about employment and the power of youth. They already see the cost, I think. I mean, as a parent of teenagers, you don't have to tell them that this is, we've done. Someone said it's a bear market in political leadership or leadership when it comes to climate recently, and the young generation certainly see that and feel it, especially in the pandemic when we stopped and they got a little shot of what life could be like if we got our act together. So they're going to be a powerful force. They're going to be voting increasingly. And I can't wait to see them exercise their muscle. But it's incumbent on us to get things going in the right direction, not them. Yet they're so young. But employment is a big part of this. And there is innovation, and that is the positive part of the story. How do you see that plugging into the conversation? And should there be more emphasis on that?
So first of all, I think when we talk about climate change, it's there are still people out there that think that if you focus on climate, you're not focused on the economy.
Yeah,
it's a false narrative, right? And the minister has already articulated extremely well what the possibilities. Just to give Canada's example, we put a strong emphasis on growing the economy through investing in renewables, an ecosystem of creating jobs. At the end of the day, this is about job creation, and we've actually recovered all the jobs that we lost during the pandemic, and then some. I forget what percentage we're actually at right now. So we have more jobs in place than we did beforehand. Now, when you look at it around the world, at the end of the day, and I'm glad the minister raised job creation. That's what we need for, as I talked about conflict. Or the food insecurity crisis. Job creation can happen with an impact on climate change that also links to food security. So, for example, we know that doing proper agriculture is good for the environment, right? It has a positive impact. So there's an opportunity here to look at how do we, with the climate adaptation funding that nations are putting in place, including Canada, that we can address. Excuse me.
The allergies are, the blossoms are beautiful, but they come with a cost, don't they?
But no, for me, this is a really important point, because imagine trying to, from the security side, talking about we need to create jobs, and it'll actually prevent a situation and conflict from getting worse. And if we focus in on the job creation through doing good things for the environment, and where the younger generation, as you stated, who want to do this, they have a different mindset. But do it in a way that actually can create more food security in countries. Agriculture, as I stated, with soil regeneration, there's so much great research work that's going on. Now, proper water management, like in some places where you have agriculture, there's too much water that goes in and floods. In other places in the same country, you'll have desertification that's taking place. Water management is an area that we also need to take a look at. But if we teach, and we're looking at in the education system, are we developing the right people to take advantage of being that industry? And when you create a supply chain for the food, if you get the agriculture piece going, in many countries there are, how do you get the food to the market? Do you have the supply chain? That's also job creation. All that needs to go into place. There's job creation within the region, and also for export. And so all this is interconnected. So anytime when we talk about for climate, I look at it as a tremendous opportunity, right? On investing in renewables, job creation, and also for preventing conflict as well.
Absolutely. And I've had the pleasure of hosting some discussions for foreign policy, both on food security and water scarcity, amazing technology. These are innovative tech companies that happen to be working in these areas. There's amazing things being done. The challenge is to scale it. I think we have time for questions, a couple of questions.
Good morning. Thank you for this. Scotty Greenwood, Canadian American Business Council. Wonderful discussion. I wanted to ask about critical minerals and rare earths. We know that they are essential in the carbon transition, and also for for solar panels and electric vehicle batteries, but also for defense goods and everyday uses. And I wonder what the distinguished panel thinks about when we talk about public capital de-risking private investment, we know these are big investments. We know that Indonesia has a lot of the processing. Canada, the United States has a strategy. But I wonder if you could just sort of help us think about incentivizing the private industry to develop these important resources in a sustainable way around the world. Thank you.
Great question. Who would like to?
Can I jump into that?
Yeah.
Scotty raised a good point here. Innovation. There's tremendous innovation going on. So I have the international development portfolio, but I'm also the minister responsible. It's called the Pacific Economic Development Agency. It's a regional development agency for a province, which trying to create economic growth. So when it comes to climate, renewables is part of it. So I was visiting one of the places that we invested, and so in mining. Those big mining trucks, right? Those tires only last, I forget, 23 days or a certain number of days. Then what do you do with them? So you can recycle them, turn them into powder, but it just, it doesn't do much. So one company approached the research center in the Okanagan in British Columbia to say, instead of recycling, how do we look at this from a renewable, like repurposing? So then they broke down the tires into, and it was 45%, I forget, approximately 45% was pure carbon. So now they're able to take that pure carbon and repurpose it in different ways, from water purification, and they're actually utilizing it where they're doing the mining operations. That's just within that. So one little research project that the company wanted to have is you ended up not only they're repurposing, they're creating new opportunities and jobs. And you talked about critical minerals. Critical minerals is that whole process we need to look very differently. We've put a policy in place now, and more work needs to be done on it, from critical minerals all the way through the actual use of it. And we need to look at this from an international perspective, because this is becoming I would say a significant challenge in terms of in some countries and how this is done. And I can throw one other international innovation. When I was in Ghana, there was some work being done in agriculture, and they were looking at microorganisms. And then one person, I forget, he must have been maybe 25 years old or something, and said, I think this microorganism can be utilized in mining, in gold mines, because you need apparently mercury to break down things for the gold. And then they've got some really good research happening right now. How can you use this microorganism to break down the things, and they may not have to use mercury. So through this work, I think we'll have a lot of innovation that comes in. So even though right now something might be a problem, maybe we just need to put more innovation into it to solve that solution, so we can make sure we have the proper supply chain all the way from the extraction to the use of these minerals.
Well, Father, I think this falls under the category of, how can we look at what's necessary, what may not fit into an infrastructure of ESG investment, if it seems like it's mining, for example, may have fallen into a category that investors would not want to be a part of. But when you're trying to figure this all out, the innovation needs to be plugged in so that you can get the private flows where they need to go.
Correct. I mean, in this case, we would need to see which minerals are we talking about that feed into which type of investments, electrification of vehicles or the solar panels, and is there a need for public capital to come in and de-risk? Why so? To play which role? And how is this done in an environmentally sound manner? But I agree with the minister that there's a need to keep supporting innovation. And in particular, I see, and we have supported several initiatives in terms of looking at young entrepreneurs and the ideas that are emerging in this group of young entrepreneurs, again, in middle-income countries and low-income countries. And there are great ideas that are coming up. And these ecosystems of innovation need to be supported. So it's not just venture type of capital and potentially, adjusted venture type of capital. The incubators, the hackathons, and all of those initiatives. But even working more broadly with the governments, how can the governments put enabling policies in place and regulations that support these ecosystems of innovation? But we come across ideas and projects, some of which are already companies that are ongoing, and what they need is support in scaling that up. So again, from that point of view, I'm optimistic in terms of what I see, but of course, again, there's a need for support, and this is the reason why we are also thinking of creating a dedicated venture window to be able to support those ecosystems in innovation in middle and low-income countries.
Which is going to be critical.
Which is going to be critical.
Yeah. We are out of time for this panel. We are going to transition to the next one, but thank you all so much for really driving home the point that we've got to connect the ideas to the practices that will put them in place and accelerate the pace of change, which I think you all very eloquently pointed out. So thank you so much. So as we do a dance of shifting, I'm going to sort of introduce our next panel as they come and sit down. We have Jay Collins, Vice Chairman of Banking, Capital Markets, and Advisory at Citi. Marc-André Blanchard, Head of CDPQ Global and Global Head of Sustainability. And Simon Harford, CEO of Global Energy Alliance for People and Planet. Hi to all of you.
Good morning. Good morning.
Good morning. You can take your mask off. Yeah.
Good morning.
Fantastic. So now we've got the private sector up here, so we can continue the conversation. So I think that we had so many fantastic points that were just brought up about the need, and the implementation, I think, is so key. Key in all of this, and I'm so glad to hear that that is going to be the focus of COP27. As we kick off, Jay, if you don't mind kicking it off for us, as we take a look at this, I think we need to once again, though, address the geopolitical challenges and global challenges ahead. And we heard a little bit about how they're thinking about that and the concerns on the part of the public sector. How is this impacting the private sector?
Well, I think that it's impacting the private sector's agenda vis-a-vis sustainability and the funding of development and climate change, in the sense that we have, extraordinary financial duress. We have. Someone asked me what I thought the elephant in the room was the other day, and I said, well, there are multiple elephants in the room, and they're all moving at the same time. And I think many of the ministers just spoke about them, but it's COVID is not over. You only need to look at China. When we sat in Glasgow and looked at commitments and the ability to commit, we had not yet begun the monetary normalization process, and we have a extraordinary inflation problem. We have a process of the Fed not only beginning to normalize the balance sheet and the Fed funds rate, but that inevitably puts emerging markets under duress. And so when you add to that, of course, Ukraine and the paradigm shift, because it does so go beyond geopolitically, the paradigm. You just have to look in the last several days of the dysfunctionality of Bretton Woods organizations in light of this conflict. So you've added, as I think Dr. Rania was talking about, this multilateral need to put everybody in the room and coordinate and cooperate in an extraordinarily complex way. When you add what's happening geopolitically into that, it makes the frameworks that we need for COP to be able to funnel into that complicated. And so, do we have wind in our face? It's more of a, tornado. And particularly, we already have, I counted last night, 29, 30 countries that are out of the markets, in the emerging markets, right? They can't fund themselves, single Bs, double Bs.
This is not insignificant. I mean,
this is going to change everything, right? Because what we put together, and if you think about this, unfortunately, there's so much bespoke infrastructure like structuring that goes on in climate finance and blended finance with markets, whether it's loan or bond markets. If you're structuring like that in a crisis, people just say, whoa, like ministers this week say, just talk to me about how I'm going to get through this year.
Yeah.
I need to go clean. And by the way, clean doesn't mean green. Clean means simple, means fast. Like, where do I have access? How do I have access? And we'll talk about climate finance once we finish that conversation.
Yeah. That is an incredibly important point. And you're talking about changes and regime changes in the global financial system that we maybe haven't seen, we don't know the outcomes, or even with interest rates we haven't seen in decades. And so layered on top of each other, which is creating extraordinary stress on the system right now. And then to try to figure out the way of climate financing. So what is going through your head? What are the conversations that you're having? Is it it sounds like it's postponed, which is...
No, I just don't think, and I learned early in my career from Dave Abshire, who's my mentor at 20 years old, never talk about peril without promise. And you just can't, we can't,
Love that.
we're not giving up. So what can we do? I mean, I think that the first thing is there's extraordinary innovation going on in the development market. And so just, innovate to replicate at speed and scale. Like everything we do, if you look at what we've just done with the World Bank at Citi and South Africa for the Rhino bond, yes, it's a $150 million transaction. It's relatively small, but we have grant money going into a bond structure with a linkage for an outcome replicable. Belize, again, it is an example of what can be done when we put value into a structure for an outcome, meaning it can be a carbon credit, it can be a grant, it can be a concessional loan, and on the other side we can blend that and get some outcome that works. We can't keep doing this without standardizing some of the process that goes into this. In other words, we're going to have linkages. Everybody wants outcomes. The market, the GFANs, the $30 trillion, they want outcomes. So we have to simplify the linkages so that the grant money or the concessional money, the MDB, philanthropists, put it into these structures with the same linkages. Just take NDC targets and CO2 levels and an emission pathway to 1.5 and say, that's my linkage, bond and loan, and link it together. So we've got to start to put those linkages together. And I thought that Sri just did an extraordinary job as she talked about something that was very complicated in the coal world, right? And I don't know how people followed her, I hope, because she put it in terms that I can't.
Right.
It's very complicated to do, but this energy transition mechanism she talks about gets to the fundamental issue of both how we're going to blend and how we're going to simplify and scale, but probably most importantly...
When you say blend, public-private capital?
Blend, yes. So blending isn't just risk mitigation into the bond market. Blending in a post-Addis Ababa world is grant money. It's philanthropy money that absorbs risk differently, plus concessional money. It's concessional loans plus bonds. It gets complex, and that is, by the way, part of the problem at scale. But last point with regard to this is that she talked about essentially just distribution of the allocation of the costs. And whether you're in the bond market and you're talking about step up, step down, how much grant would go in to induce a certain outcome, part of what becomes so complicated for us, and including the MDBs, is every time we negotiate that justness, who will take what, where, and what's really fair between us. And we won't get to trillions this way. So there just has to be some standardization of principles so that every time we sit down, we can actually not be just crafting 150 million, but maybe we take a Rhino bond and we say, okay, with that model, how many more can we do this where we don't renegotiate from scratch? So let me stop there.
Marc-André, is this also what you see as one of the main challenges? How is this manifesting for you? And talk a little bit about how the global economy is playing in.
Well, it's interesting that I would say, so I represent a pension fund, CDPQ. We have $420 billion CAD invested in 60 countries around the world. We are very interested by, we're a leader on the climate side. We're interested to think about how do we go even more in emerging markets. The issue that at this time, so we now have questions from our stakeholders that we didn't used to have before, like it's now about countries that we invest in. A lot of questions, which 2 years ago or 12 months ago we didn't have. That is one thing. Then the issue, I think the fund, like what Jay says about, to me there's a problem of also of trust in the system, all of the parts of the systems. Like there's such a like between the institutions and the private sector and some countries and governments. We need to build the trust, like institutional investors like us, like just think about it. In the 50s, they were like around, the assets under management were approximately under 250 billion. Now, fast forward now, depends on how you calculate it. Some say it's 100 trillion or 250 trillion. But let's just take that, it's 1,000 times more. The system is not used to deal with players like us. And we need to change that. The institutional investors are 900 times bigger than all of the MDBs together. So, and there's nothing that is adapted for us in the system, or very little. And the fact that we're basically not invested in continents like Africa, to me is a mistake, and we need to get there. But we need to start back to the question of trust. And we are private capital. We're not concessional capital. So we need to get the risk-return equation right. And those people who believe that we don't want to take on any risk, no, we want to take on some risk. Because if we don't take risk, the returns won't be there.
Hey, that's right. That's where you get your...
So, but this is a very difficult equation to get.
Why is there a lack of trust?
I think it's and I've seen it this week talking to many countries, because we have things that we want to develop and stuff. There's this, and it's not coming from the governments of the countries. It's between the institutions, and it's a question of, maybe lack of trust is too strong. It's the mandates of the institutions are different. Like what Janet Yellen's talked about the MDBs and said, maybe that there's too much of a focus on the AAA rating. And so the role of the MDBs is not to de-risk institutional investors like me. That's what the MDBs think. And I respect that. On the other hand, we need to find a way to come into play. And it's going to be we have very little knowledge about some of these parts of the world. We need to start somewhere. And we also have options to invest. And so we need to, if we're going to go in it needs to make sense for us and in line with our fiduciary obligation. So what I think is needed is very practical. Like we need way better instruments of, like the pipeline of project is an issue. So that is a very easy thing to that would seem to me. We need help on developing the pipeline of projects. And a lot has been done, but very little is being shared with institutional investors like us. Therefore, there's a lot been done in some parts of the system, but very little in our world, and we don't have the funds to do that.
I hear transparency. So
transparency is another one. But so the share of data, it's part of that pipeline of project, I would say, and better understanding of the risk. The second one is the first loss guarantee. We need to have a way better, easier, faster, at scale. The issue for an investor like us is scale. We invest in large tickets, and the instruments are for smaller tickets. And so we need to think bigger and be more ambitious on these things.
Which theoretically is great because we need scale.
Exactly.
That's what's needed. So this is good.
And yes, it is very good. And so we need, just give you an example. I'm new to this investment world, so I'm very simplistic. I was a lawyer and an ambassador before. So I arrived at, I look at our portfolio in emerging markets the last 3 years. On the currency side, our portfolio was affected 13% negatively because of the currency only. So Like, this is a real risk for us. And we report twice a year in Canadian dollars. So we need help on this one. It's a real one. And so my point, so first loss, foreign exchange risk, pipeline of projects, these are three things that are, to me, fairly easy to, but it's a change of role for some. What we see is that some DFIs are now faster and better at actually working with us, and that we see an opening there. And that's exciting. I can talk to you about what we're trying to develop with FinDev Canada. It's exciting and it's innovative, and we do, but it's still fairly small. FinDev Canada needs to be put on steroids. Yeah. So Western governments need to put their DFIs on steroids, starting with this country.
I want to bring Simon into this, and let's pick up on that again in a moment. Simon, you come from a different perspective. Jay mentioned the philanthropy part of it. Tell us a little bit about what you're doing, because this is a new initiative and really exciting, and again, addresses the scale. So if you wouldn't mind explaining a little bit about
Sure.
the role of your organization.
Sure, thank you. Yeah, no, we are new, so let me just take a moment to explain that. We as the Global Energy Alliance for People and Planet are big philanthropy saying we've got to get involved. To date, global philanthropy has put just a few % of its disbursement into the climate agenda. That needs to be dramatically higher. But as colleagues have said, we've got to figure out a new way of approaching this. We've both got to get the money flowing, the solutions flowing, but also work in a different way. Because if we all work to the old way, arguably that's not going to achieve the right results. So three big philanthropists, Rockefeller Foundation, IKEA Foundation, and Jeff Bezos through his Bezos Earth Fund, have said, let's create a platform, which is GEAP, which harnesses big philanthropy at scale, and other philanthropists will be partnering with us. We stand in the energy transition and the energy access agenda, and we must not forget energy access to the justice point. We've still got 1.5 billion people without sufficient or any access to energy, and that is the biggest single disabler of development, whether it's health or education or livelihoods. So we do want to keep energy access in this frame. And what we're saying is, how can philanthropy help constructively in collaboration with everyone else? That's the alliance in our name. So if you think of a triangle, you've got governments and countries. This must be country-led, in our opinion. And those countries, it is their right to figure out their transition that is development consistent. And they must be guiding us on that. We've got the concessional multilateral DFI world. And we've got the private sector, which I think, as we're all agreeing, is not yet fully unleashed. We want to sit right in the middle of that, saying, how can we get that triangle working with philanthropy? Number one, with our capital. So to the points being raised about where's the role of philanthropic grant capital, whether it's in a capital stack of a facility like CDPQ are thinking through, or whether it's actually at a project level to unlock that project. Because ultimately, it's not just getting private capital to flow for the sake of it, is because if we're going to solve these problems sustainably, they need to be private commercial models that have figured out how to self-sustain a solution with private capital that reduces energy poverty and that allows development in a green way. So that's what we are here for. What are we also trying to bring in addition to the capital? We are offering, in a country-led basis, whatever support we can to the governments as they figure this out. As the ministers have so well put it earlier, this is difficult stuff. They've got to develop their own capacity to make the plan and then to implement the plan. So we also sit with them, offering support as they make the plan. And without a plan, capital's not going to flow, because capital has to flow to something which is viable for that capital, including concessional capital, or indeed our capital. So we've got to make, the governments have got to make the plan, and we're here to help them with that. Then we have to start financing the plan. But then also we've all got to focus on implementing the plan, because we feel that there's a need to speed things up. and there's a need to create demonstration results and pilots, which might be small scale, but at least it's starting to get this system working. And that will then inform how do we scale up, how do we aggregate, create platforms for the capital of the size of my colleagues here, and where do we learn? Because we don't want to sit and be waiting for years for the perfect plan. We haven't got time for that. So we want to, with our risk appetite and our desire to be implementing and doing, not just passive, we want to be active capital. How do we actually get started this learning by doing? And then we can adjust and we can scale and we can start to.
Very interesting. It's the venture capital in a different universe. You know, that is we're going to early seed, make some mistakes, fund what we see as the.
Exactly it. And if you look at our backers, some of the most fantastically successful entrepreneurial, innovative approaches, whether it's Rockefeller through its foundation work, Jeff Bezos, of course, and IKEA, a remarkably innovative success. And it's no coincidence that they've requested me as a private sector person to lead this and create a private sector discipline and speed to deploying philanthropic capital.
It's super exciting, much needed. I think we'll all agree to plug in. But you're all focused on results, and it sounds like this is very results-driven, philanthropy in the way that Gates changed the game on for results. Jay, weigh into what you've heard here and how important, when you're talking about, the linkages, are you talking about standards, KPIs, reporting? Is that what you're talking about? Needing a framework that, same language everyone's talking about?
So let me answer that, and I want to come back to build on our partners here. So, yes, I meant links like the SLBL in link, meaning a KPI. And there's, a need for the NGO or official organizations to come in and set, or a philanthropist to set what that KPI is that allows for a fair outcome for some balance of what is fair for everyone around that table, right? So there's the grant money has to be put in, and it so relates to what you said about this trust issue. Since Addis Ababa, the blending issue, trust is in the room, right? Grant organizations are not only not usually capacitated to discuss complex financial structures, but also are wondering what is appropriate for the financial sector, private investors to take out of this. So you have to have some commonality around what the linkage is, what is material enough to generate a certain amount of inducement, who verifies it, right? What is that framework on top of it? And we've got to standardize that because we're doing this one by one.
How much to take out of it? How much profit can you take out of it while keeping? That's what.
But also even just the construction for Belize we can't afford to have 2 to 3 years of the creation of what the biodiversity objective is, how it's going to work, how the government is committing to what plan, because we just don't have that kind of time. So, second point is that we can't scale without the bond market. In order to take this 30 trillion of theoretical monies that we're talking about, we need capital markets. The capital markets aren't paying the kind of greeniums that a lot of the ministers that sat here today and others here are happy with. They want to deliver an outcome for more than what the fiduciary responsibility of many investors will give. So you have a couple choices. I mean, one is, I think both GFANZ and this 30 trillion overstate what is really available to the weaker credit, non-investment grade emerging markets. And so there's an expectation mismatch that's causing a lot of tension this week. Second is, you've definitely got to have a different kind of role of the MDBs. And I've been saying for years, not publicly, but look, I don't understand. Basel III created a rating paradigm that strapped the MDBs in many cases to behave like Citi does in the risk room. Mm-hmm. And if you're protecting that rating, I give up a notch or two. I mobilize an extraordinary amount of capital for very little cost if I'm willing, as a shareholders of the MDBs, to let them notch down. very complex discussion, but after COVID, we don't have the kind of capital that we're going to need to do what we're talking about here. And the reason that's so important is partial risk guarantees, for those of you that aren't financiers, if you just take part of the risk away, in the bond market, it doesn't really work because an emerging markets investor wants that risk and that return. So you either risk it all the way up to investment grade and you put it to investment grade investors. That takes an awful lot of firepower to do that for a lot of these countries where their risk is kind of tearing down now. To say the only solution to access that capital is going to be to tear up to investment grade, to reach, by the way, the 30 trillion, because most of that money is up in investment grade zone, right? So I think at the end of the day, we're going to need the risk enhancements primarily in the loan structure space and link those back to the bond market. A lot of work.
This is why it's so important to have private sector and finance in the room, because this is actually how it gets done. And it's complicated and out of reach of some who have been in the arena, what you're talking about, but that's how it gets done. We have to let you go, Jay.
So sorry about that.
Yeah, that's okay, because he's got...
and leave you in these two.
Exactly, but and I'll pick up with Marc-André on that. But thank you so much, Jay, for being with us. Jay has another appointment across town and was very optimistic about how long it would take him to get there and was told, no, that's not true. You'll never make it. So we're letting him go. So I think Jay just brought up some great points. How do we prioritize this? What would you like to see happen, given the fact that there is this sense of urgency?
Well, to me, it's a very... I'm very hopeful because they're good things. I'll finish with that, but I'll make a comment before. There's an issue that I think not everyone realizes, particularly when you spend a week here, and it's a lot of the discussion is the same that I've seen since I come to this discussion. It's all about this hope that the MDBs will bring us from billions to trillions. They're an essential part. They're amongst the ones that can help the world so much. I believe in this, in even reinforcing them. The issue is, let's be honest, ODA around the world has been completely stable for the last 5 years. And ODA includes the funding by the shareholders of the bank for the MDBs. So we cannot expect in this context that we're going to have a huge increase. You're going to have some, but that will be prolonged and all of that. You'll have some increase, and some countries recognize the important role of, and I do. I just want to repeat, I'm a big fan of MDBs as part of the solution, as an essential part. But on the other hand, we need to start completely the mind shift. There's a shift in the mindset in governments, in this town, everywhere in the world, where the public sector is part of the solution for the challenges we face, which are inequalities and climate change. But unless we bring the private capital in, it's a change of mindset. It's also a change of mindset when you see someone like Simon here, like that. Actually, I believe so. The table needs to be needs to look different of those who are contributing to the solution. Now, family offices and foundations are an integral part of what we ought to be. Like building together and platforms, like a huge one. For a pension fund like us, I'll give you an example, and that's where I'm hopeful. We are now developing a platform, $1.2 billion platform. We're working on it. My public affairs people would be screaming at me because they would say, you can't talk about this because we want to announce it later because it's not covered. But I'm going to tell you where we're going. We are actually thinking about adaptation. So financing something that is very tough to finance in lower middle income countries. We're putting together a group of partners like never before. And who would have thought that a pension fund would be doing that? So we're putting a DFI, we're putting a multilateral funder. We have philanthropy partners that are starting to come to the table. another financial institution from Asia and us to put this facility together. But we need a first loss partner. We need a foreign exchange coverage partner. We need a project development partner. Right? This is quite a different story than the old pension funds, giving its money to someone else to manage and give a return. So, and we're excited. You should see the people in our place. The entire leadership of the CDPQ is behind this. Our young people are excited to contribute about it. I was here this week with some to present it to some of the partner countries. We've identified 25 countries. They said to me, this is the most exciting week we've ever had in our career. So this is hopeful.
Yeah.
This is people are excited and they want to make a difference. But we all need the thinking of Simon when he said, this is uncharted territories. We need to innovate and we need to think about partnerships differently. And there needs to be a shift in the mindset that it's not about public sector money. Mm-hmm. And I'll give you one last editorial comment. When we're talking about the $100 billion for climate, that they keep talking that the promise was not fulfilled. I'll just give you the example of Canada. Canada has put, usually when there's a call like that, Canada puts approximately 2 to 2.5% of the call. That's what they assume is the share of it. So the government of Canada has put $2.1 billion in actually renewables and climate investments around the world. But nobody talks about the fact that actually the Canadian pension funds, at the same time, during those 5 years, probably put, my assessment is certainly 10 to 15 times more money, probably 20 times more money in the emerging markets for climate at the same time. But nobody talks about it. And my point is just, we're not part of those discussions, but we're invested heavily in India and in Colombia and in many countries of the world that in emerging markets on climate. We're one of the 3 largest investors in renewable in the world. So this
should be talking about that.
No, but we should. No, but my point is just these worlds don't talk to each other, yes. And don't we need to. This is the question of trust that I was talking about.
Yes.
But I'm hopeful because I think we all, for example, Ukraine is a good moment. We will all need to come together like never before for this. And I think this is a time to innovate, and this is a time where I think we can use that to change the world.
And Simon, I think it's perfect, and we're going to try to squeeze a question if we can, but I do want to get a final thought from you as well. And I think that there's a reason that this was created, that what you're doing was created, because there is a sense that there is a moment. We saw the same thing in COVID as a response for all the horror of it that's still happening and tragedy. It changed what people thought was possible. The speed with which you can act when you bring all the stakeholders together. It broke the mold. So there's no reason to not jump on that innovation. Are you feeling hopeful, and what's your focus, what's your priority as you move forward?
Yes, we are absolutely hopeful. First of all, we've got no choice. We've got to fix this. But secondly, if you actually look at the constituent parts of what needs to be done, they're doable. But I think to build on what Marc-André says, I've got a really boring view that good process equals good outcome. Bad process, bad outcome. I'm not sure our process is right here. So I think
that's what you're touching on.
So if I can build on what Marc-André says. So first of all, we've got to coordinate much better. There's so much fragmentation. Take this facility that Marc-André is referring to. There are numerous other conversations going on about blended finance facilities. There's some common intellectual property in there. There's clearly bespoke aspects. Why are we not combining forces on the common intellectual property? Secondly, in terms of supporting countries with their country plans, there's some commonality in what is needed. Of course, again, it has to be bespoke. In terms of the funding, the beauty of the private sector funding is sort of, you know what you're getting, and they know what they want. So, and the private sector wants to invest. To emphasize what Marc-André says, the private sector needs to take risk because otherwise it's not going to get the returns. We as philanthropists, we want to take risk, not because we want financial return, we want outcomes return. So there's risk appetite here from the private sector.
Which is critical.
There is risk appetite from the philanthropy sector. We need to blend that with the risk appetite from the concessional world, and there's the debate in there. So the funding is available, but it needs to know what it's funding. That's the plan. So I'm conscious of time. We are very optimistic that this can be done, it must be done, and at the constituent parts, we know how to do it. Unleash the power of innovation and private sector capital on the constituent parts, whether it's growing renewables, whether it's hydrogen, whether it's storage, all of those requirements, whether it's grid balancing. The private sector either has or will solve that. But we've got to put it in a different, better, coordinated process, and that's part of where we're seeking to help.
And the fact that we're having this conversation today, I think, makes us all feel hopeful. It's getting that sort of the net of the infrastructure of the finance and the IP sharing. I think that needs to happen. I think we have time for maybe one or two questions.
Hi. Good morning. Good morning to everybody. Thank you for inviting me, Diana, to this. My name is Raja Jindyala. I'm the CEO of Yatra Ventures, and I need you, and I would like to challenge you because we've put in $100 million into an East Africa energy transition because 95% of East Africa is on charcoal. And about 3 years ago, we started a alternative finance providing the government an alternative solution saying, we will take you to the capital markets if you prove that this is commercially viable. They put together a $20 billion value chain, 4 projects, each is financed through corporate bonds, through different financing mechanism. And the 2 things that struck me of what both of you said is the process stuff. We took the approach, we will build the capacity of the government. I'm coming to the question. We took the approach, we will help the government by providing financing the technical assistance of up to $2 million so that we have an equal partner across the table in understanding what it takes to go to the private capital markets. 2 is the transition is not just about technology and money. It's actually about people's lives. How do you get them to go from charcoal to LPG? And I think that story is missed a lot of times in this talk about instruments and technologies. And I think that's a critical help we need in the conversation from both of you. And then the last bit of it is we convinced the governments, the 7 governments, to take 40% equity, meaning instead of giving me a sovereign guarantee, as our consortium said, why don't you put your equity in and we'll raise the rest of the equity? So one of the biggest de-risking elements that took place was the 7 governments said, okay, we will bring together, put some equity. It's a purely commercial enterprise. And so I want to talk to both of you after this, but the biggest question has been so much debate outside the continent, but there's actually stuff going on the continent that people don't know about. And so I feel like there's so many platforms being put together without linking it to the actual visions and plans that have already been developed and have viability. It's like a car that needs fuel to test it. So until we came along and said, we will put the $100 million development capital to develop this project, then that's what tested the system to say, okay, this 20 billion value chain can move forward. So one of the questions I have for both of you is how do you take it off the conference tables and link it to the youngest population on the planet, waiting for this energy transition debate that's happening? And that is what, I don't have time because we need to close. It's a $4 billion investment. And it's a huge development impact. And as a former aid person and led the Power Africa initiative. Even me, having worked at the World Bank, having worked in the US government and DFIs, having trouble directing the conference table conversations and platforms to the actual $4 or $5 billion deals that require money right now. So that's the challenge I'm facing, and I'd love to talk to you after this about it as well.
Thank you, but would you both like to just respond? It's the fragmentation you talked about. It's the sort of lack of connecting the money where it needs to go.
Just very briefly as of time, and couldn't agree more. I mean, first of all, we absolutely don't have simple answers. These are not simple issues. So we're here to explore and partner and assist. We definitely don't have simple answers. Could not agree more about this has got to be from and with and by the countries and the continents and the regions concerned. We are not just theoretical now. We're already working in a dozen countries in Africa, trying to assist with exactly what you're talking about in situations like that. And the solutions involve sort of adjusting bits of the system. There's no one problem and one solution. We've got to get it all working at the right time. So you're absolutely right. The government needs to be doing its bit with the policies and regulations. We've got to keep people at the center of this and the justness of what's happening. That's why the word people is in our name. The funding can be unlocked, but it's got to be fit for purpose into the use of funds and the outcomes. So these linkages that you talk about and working from within the countries, we could not agree more. And that's exactly what we're doing day in, day out in Africa and in Asia. So happy to talk afterwards.
The comment that it brings me one thing. So agree with everything Simon said, but I'll add one other perspective based on the experience we've had just talking about the idea of our platform with partner countries this week. Some countries said, well, that's very nice, but it's about lending money and for adaptation project. And they said, well, we can raise the same, we can raise money on the international markets at the same price. So why would we take the money from you? And it's a good question. It's a good question. We're private capital. So this is, but the answer was, to your point, and that's what this city and the institution need to understand. We're starting from scratch in Africa. We are in the bond markets and stuff, but outside of that, we have no other investments. So we need to learn. So don't underestimate it. And this is where philanthropy will be helpful, I think, for us to get there. That's why we need to partner. But I think this is how we're going to get into deals. But we're not ready to get into private equity in Africa. We know nothing about that.
But if I may briefly add to that, we need all of this. We need you helping with grid-scale renewables.
Yes.
We need the venture capital industry, which we work with closely, helping with the smaller bottom-up energy access type solution. We need all of the above.
And we need to start somewhere.
Yeah.
So that's why I'm saying I need to start with my lending.
Yeah.
And I said to the countries, we need to invest in each other here. I know I may be not coming at such a favorable term to you, but you know what? I'm a long-term partner. Yeah. I'm going to leave my money in your country, re-lend it, and use it for other projects. And maybe one day I'll be able to partner for your light rail train around your capital that you want to build.
Right.
At the moment, this is a risk I cannot take.
You're investing in the relationship. That's what you're telling me.
And also in developing our knowledge with the region. Because too few of us, very few, I would say, almost none of the institutional investors have a footprint of some size in a continent like Africa. But we're in, like in Indonesia, we have substantial assets in Indonesia. We're involved in a port. We're about to be involved in an infrastructure project. We have, but it takes time. But we're getting there. And so my point is, I think everybody needs to understand that we need to go fast in some ways, but we also need to. There's an adaptation bar, a curve or hill to climb for the institutional investors, and don't underestimate it. This is when we need help on that front.
Yeah. this is why I think these sorts of events are so powerful, because it brings people together in a room, and even when we do them virtually, so they can connect to try to sort of supercharge the relationship building and the change that has to happen. So thank all of you. I'm going to let you get to the part you really want to do now, which is network with these great folks and everyone who's on the panel. So thank you so much. Appreciate it.